Stay there. Okay, so we have about 10 minutes, sorry, for Q&A now, and but Adel will be around as well in the evening, so we can have follow-ups. So start with Lawrence.
Thank you very much for the detail on the business. Could you give a little bit of a colour on the competitive dynamics as they've developed over the last 3 years? Clearly, in some areas, I suspect there is more competition. I think understanding how you're going to perform will be heavily dependent on what the competition is doing in those areas.
Sure. So let me go through kind of segment by segment, right? Because it varies across. In our TC core, as I said before, our focus is on German and German outbound clients, and we have pretty good position in that. So when we compete against BT Global Services or AT&Ts of the world or Verizon of the world, because we have such a large component of Germany in their, i.e. they're part of the solution for them, we tend to be very competitive. When we drift and have less of Germany content, then it becomes more difficult for us to be competitive. So we're very selective about how do we go after clients that don't have big German footprints. Obviously, we're developing Engena, which is SD-WAN solution that gives you a different dynamic, right? But it's targeted at clients that actually are open for standard solutions rather than complex custom configurations that they need to run their business. In the classical IT, look, we've struggled to compete. This is one of the reasons why we didn't deliver on the plans before, because the competition was much stronger than what we predicted, especially around price. Now, we tend to be very strong in Germany, and you've seen some of the latest. I mean, we won Sparda Bank, which is the largest outsourcing deal in Europe to date. And we competed against all the competitors that you would know. It's a deal that, obviously multi-year deal, but I was very comfortable with the margin that we have for that deal. So if it is close to us, we know the clients well, then we do very well. And we are in that similar position in a few European countries. Outside of that, when we stretched ourselves before, which we did in the past, we struggled. So we're trying to make sure that we're focusing on the right markets where we do have the scale, we have the capability, we're credible to be able to compete. Then in the growth areas, look, it varies. In security, we're extremely comfortable competing, right? Because it is an area that's still not close to commoditization and requires quite significant capabilities and experience. And we're really good about pulling together solutions with our partners, the likes of Cisco's and Symantec and people like that in order to present to our clients what we need. So there we're very close. IoT is very early. Everybody's trying to figure out what's my business model? How do I compete? How do I scale? I don't think we have a disadvantage there. We have some interesting IP that we've developed in managing connectivity and managing devices that our competitors don't have. And the stack that we have announced with Microsoft, with Azure, you'll see Microsoft was very excited about having that because of the entire solution that we can build to the market. But it's early. It's very early. Cloud is a tough market, public cloud, right? OTC is beginning to get traction. It took a lot longer than what we thought, and we position it as an alternative to AWS or to Azure, because these guys, on a scale level, forget it. I mean, they are at a different planet, if you will. But there are many clients in Germany that say, I want my data to be in Germany. I am not comfortable for the data to be managed by a non-German company. And we had a win like the European Nuclear Agency that wants to put all their data with us, right? Where we are actually managing all of their infrastructures for their testing and for their R&D, et cetera. Nordea Bank that came and put their investment data and investment applications in OTC that were worried about putting it somewhere else. So you have things like that positions us well, but it is an extremely competitive market. So it varies dramatically depending on the offering, but the market is competitive more and more as you get into areas of IT. And we feel, and it's competitive in the network as well, but we feel very comfortable with the assets that we have that we can compete well.
Okay. So question from Andrew?
Yeah, thank you very much. Just a question, as best you can, could you give us an idea about the margins of each of those buckets of business? And then second question, could you just talk about how the buyers, the CIO that was at the top of your chart, are buying? Are they buying piecemeal and using a pick and mix approach, or do you get the benefit of having the business in the traditional telco side of things when you're selling IT? Thank you.
So I won't break down each margin. That's not something we do. But look, I'll give you an idea. So in the TC business is good margin. It's a double-digit margin for us. Good business sustains the margin for it's been sustaining it for multiple years, right? And as I said, the revenue there is flattish because of all of the dynamics of all IP migrations and things like that. Our IT business is single-digit margin. Right? It's a business that, and it's a mix of things, right? So we have, for example, a private cloud business that's beginning to grow very well in that classic IT and has double-digit margin. But then we have, traditional hosting, where it's very competitive and it's eroding, and you have end-user services that, which is why we said, look, we're not going to do that business anymore. And then the growth areas, look, it's very early. So security is delivering very good margin, beginning to grow. We have scale. SAP, double-digit margin. But the other areas are early because we're piling up investments. I mean, we are putting big investments in IoT. We're putting big investments in cloud that, dilutes the margin, obviously, today, because we're investing ahead of where the business is. And then finally, road charging, double-digit EBIT margin. That we feel very comfortable with.
So is the direction of revenue trend dilutive to margin?
Not if you look at it over the last multiple years, because these businesses that we are investing in today are beginning to get into positive margins. Security, last year was half of the margin that it is today, this year, as they got the scale, because we gave them a lot of scale before they had the revenue, and now they have revenues catching up. IoT, some of the new projects we're seeing, has very good margin, whereas the old projects that we did where we had large investments and not enough revenue were... So we believe the reason we get EBITDA to growth is that balance starts shifting more and more to the growth areas with good margin. And we address the IT margin head on with the cost savings, and of course the overheads reduction is also going to contribute to the margin.
And also don't forget, I mean, something like IoT, actually, I mean, it's cost you money right now because it's a startup phase. And also this year we have stepped up the IP migration here. So if you look at actually the guidance and wonder why EBITDA is down year on year in the guidance, I think it's basically due to those two things and the investment in those, let's say, specific growth businesses. Will be always investments in growth business, but we think it's a bit of exceptional, year-on-year development. So gives us confidence. We're sort of on second takings. So Ulrich, and I think that's probably the last one because we have to shift gear and move on to Claudia. But we are around. So Ulrich.
Yeah, thanks. There is this joke that if you put an idea to a German manager, the first question they'll ask is not whether it makes business sense, but whether it needs Works Council approval or not. So what's your experience with how your plan sort of gelling with the Works Councils and the unions? To what extent do you see risks in the execution of your plans as you sort of laid them out today, with regards to sort of getting the buy-in from that side of the business? Thank you.
Great question. So look, the social partners are part of our fabric, right, in Germany. And it's not new to me, right, because I've managed European entities before. I'll be very honest with you, I would be a lot faster if there were no work councils, but that's not the case, right? So we're working with them, and part of my onboarding, I spent quite a bit of time with the social partners to understand their view. And they're all in support of getting T-System to be a healthy business going forward. So we are working together. We're trying to find common solutions and common ground, and we're very careful about not compromising in the areas that are critical to us. So we're making it work.
Thank you, Adel.
Thank you.
Great to have you.
All right.
And let's wish him good luck. So.